Welcome everyone. This is the Indian Express of September 4th, 2022, and I will explain this newspaper in three steps. First is why is the news, second is what is the news, and third is what can be the future prospects of the news. So, coming to our first news, politics over economics in freebie row, call on free food grain awaited. So, this is because there is a conflict relating freebies in opposition as well as the government. So we'll see what next have been done. In May, Department of Expenditure, which is the Department of Government, advised against extension. Revenue on direct and indirect taxes is now a question. So this Department of Expenditure has advised not to expend more, and only the revenue which comes from direct and indirect taxes is now the only option. It will only give cushion to the expenditure by government. So a decision to extend the Prime Minister Garib Kalyan Ann Yojana, the government's free food grain scheme, is to alleviate COVID distress, and it is likely to be a political call, with the sixth phase of the scheme coming to an end this month and the merits of yet another extension being actively discussed at the highest level, a top official has told the Indian Express. So this is about PMGKAY. So this free food grain scheme, the merit of this scheme is now been discussed, that how much it has helped or not, and talks for its another extension, that whether it should be promoted next or not. Now in terms of fiscal math, the constants are on the table. What is the math now? An extra outflow of rupees 2 lakh crore for the estimated food, fertilizers and cooking gas subsidies that have shot up in the aftermath of Russia-Ukraine war. So this is more, you can say, extra budget that was allocated, rupees 2 lakh crore for food, fertilizers and cooking gas, because of this Russia and Ukraine war, because food shortage was already there. Even as revenue collections on both direct and indirect taxes front have picked up, offering a welcome buffer of sorts, the Finance Ministry has explicitly laid out its concern. So both direct and indirect taxes have raised, these revenue collections have increased, but after that also the Finance Ministry have its concern over expenditure. There are still things to come. There has been an extra outflow. How much extra outflow? Of about rupees 1 lakh crore in fertilizers, rupees 80,000 crore in already decided food grain, which is a subsidy until September. There will be some outflow on the petroleum side also, because logistics also is a part of such food grain distribution, because transferring one, you can say, from one city to another city takes transfer with the use of fuel and petroleum. So that is why, and petroleum cost have gone up, way up than ever before. So that's why, and that extra charge is also for petroleum. And the petroleum side also, prices have gone up and spending has gone up for the cooking gas through subsidies. It will be significant. Now if the free food grain scheme gets extended, the cost for the second half would be little less than 85,000 crore, close to that but a bit lower. So these are the estimates that are being made by Department of Expenditure Ministry. Okay, we will see on page number 2 of Finance, in an internal note, advised against the extension of Pradhan Mantri Garib Kalyan Ann Yojana scheme, both on the grounds of food security as well as on the grounds of fiscal ground, that is the revenue sector, arguing that it's far beyond the need at a non-pandemic time. So during the pandemic time, the food grain distribution was increased massively, and now it is saying that it's not that much needed after after a COVID period. Huge increase in fertilizer subsidy burden, both urea and non-urea. So this increase in fertilizer subsidy and also reintroduction of subsidy on cooking gas, reduction of excise duty on petrol, diesel and customs duty on various products have created a serious fiscal situation. So this is there was a reduction in excise duty on all of the petroleum, diesel, because international market, the petroleum rate is very very high, and what government is doing, it is acting as a cushion for Indian consumers, so it is bearing the cost of the petroleum. Now government also is also staring at a surge in fertilizer subsidy, which is expected to be between 2 to 2.5 lakh crore depending on the volume of utilization. So this is also, you can say, okay. So this was of data. Now it is in its note in May, the expenditure department has said that the budgeted fiscal deficit at 6.4% of the GDP was itself extremely high. So this is the current GDP, current not GDP, current fiscal deficit 6.40 of GDP was itself extremely high by historical standards, and deterioration therein poses a risk of serious adverse consequences. So already this fiscal deficit is high, and if more expenditure happens, then it obviously it's a risk for finance department. So now more. So on the positive side, healthy revenue trends so far have led to expectations of tax collections crossing budgetary targets this year. So both revenue and non-revenue tax collections have crossed budgetary targets. That is what it was expected. It had been more than what it was expected. So coming to future prospects, so this news is obviously important because a lot of Indian families depend on GKY, and if such extension is stopped, then the poor can suffer, because some families are big and they need more grains in order to serve the food for their family members. We'll see how government will react, because Department of Expenditure has advised again extension. Now the call is only on the government, and government will be looking at its political base also, because of the upcoming elections in many states, and also for the prime minister seat in 2024. So we will see, we will track this news. Then comes opinion page. So this is by P. Chidambaram. As you know, every Sunday Express comes with an article of P. Chidambaram. Now this is about what 13.5 reveals and hides. So this was released, I think, 2-3 days ago, that there is a growth rate of 13.5% in terms of GDP. So what he is now estimating and analyzing both the reveals and hides, that what that numbers really matter, how this is being, you can say, adjoined, both reveal and what is being hidden. So now the NSO's estimate of GDP for the first quarter, which is April to June fiscal year 2022, were released last Wednesday. The number that is prominent is a growth rate of 13.5%. Okay, so in terms of GVA, the number is 12.7%. Given that the estimates of rating agencies, banks and RBI ranged from 13% to 16.2% RBI. So this was 13%, which was estimated from by banks, and RBI estimated way ahead, I would say 16.2%. Any number falling within the range would, I suppose, would be enough to gloat. However, there is a large word beyond statistics. This essay is about what the NSO number means to millions of people who live in the real world and who will be happy and who will be unhappy. So, this article is not about numbers. This article is about what that numbers really mean to all the citizens of India. Numbers that matter. I have constructed a table, see box, containing the corresponding figures for 2019-20. So here is the box. Here is the box. You can see 1920 and then 2022. What is the increase in percentage? So this is, I will tell you in short, agriculture, forest and fishing 9.9% in 2019 and 4.5% in 2022. Mining and quarrying increased from 3.3 to 6.5. Construction increased from 1.2 to 16.8. Trade, hotels and communications decreased by minus 15.5 due to COVID in 2019, and now it has increased to 25.7%, bigger increase from minus to 25. Financial, real estate and professional 10.5, it has gone down to 9.2. So okay, so since 2021 was a pandemic hit year that witnessed prolonged lockdowns. I have not included that year's numbers in the table. I may point out that 2019-20 was a normal year. 2021-2022 was the year touted as a recovery year. 2022-2023 is the year in which one hoped that there will be a full-fledged recovery. So everyone really hoped that there will be a full-fledged recovery in at least in 2023. So the focus should be on the numbers for 1920, 21-22 and 22-23. Further, the numbers must be viewed from the point of the people who will be affected by the performance of the sector concerned. So these are the sectors which are given: agriculture, forestry, fishing, mining, quarrying, construction, trade, hotel, transport, communication, financial, real estate and professional. So for example, agriculture, forestry and fishing, these three sectors affect the life of majority of families in the country. This is true and clear. Mining and quarrying and construction are important. Why? Because the two sectors employ the largest number of workers who have low skills and little school education. This is also true. Mining and quarrying and also the construction, you see the laborers who come to do construction, they have very little school education and skills. They have many skills, but in the present society it is called low skill if you have only and only physical skill. Now financial, real estate and professional services are also important. Why? Because it employs the educated and skilled white collar employees. This is how the society works. The benchmark is 2019-20. A country that is growing must grow at a brisk rate over and above the previous year and the benchmark year. Okay, so previous year and benchmark. Okay, benchmark year is assigned by the Ministry of Finance, which compiles all of this, and previous year is calculated in terms for general idea. Now it is evident from GVA figure that while the economy did recover in 2021-2022 over the abysmal performance in the pandemic year 2021, sector growth did not reach the level of output in the normal year 2019-20 except in agriculture. So he is saying that economy have recovered a little bit in 2021-2022 regarding the pandemic year, which was 2020 mainly. So therein lies a poignant lesson: pandemic or no pandemic, farmers and farm laborers have no choice but to toil in their fields to earn for the survival. They do not have the luxury of work from home. The marginal increase in financial etc. was statistically insignificant. So it's talking about the poor sector of you can call poor segment of a country who are farmers and farm laborers. They have no choice but to do uh, work in their fields to earn for their survival, not out of woods. Therefore, the growth that we must look for in 2022-2023 is not the growth over fiscal year 2022, but the growth over fiscal year 2020. The last rows of the table highlight the difference. So I've already told you this last row which has been made. While the growth in quarter 1 of the 2022-2023 is impressive when compared to quarter 1 of the previous year, it is worrying when compared to quarter 1 of the benchmark year 2019 and 2020. Agriculture, etc., seems to have retained its spirit. The pickup in financial, real estate, etc. is also encouraging, but the other three sectors in the table tell the story of an economy that is not yet out of the woods. I had not put manufacturing in the table because I did not want those numbers lost in the forest of numbers. The value addition in manufacturing in quarter 1. So this is more, I would say, manufacturing growth is still sluggish. Why? Because of inadequate new investment or low demand or both. Intuitively, I concluded that MSME sector is still in the doldrums. So he's talking that besides manufacturing sector have growth somewhat, but it's also very sluggish. You can say very lazy and slow because of no new investment and also low demand. Slow start. The crucial question is, what are the implications for the future, especially for employment? So he's talking about future aspects. The status of farmers and farm laborers will remain the same, and there will be little movement to farm jobs. Since mining, etc., and construction are only slightly better than in 1920, unless there is a strong revival, unemployment among unskilled and low skilled workers will be high. So he's talking that since mining and construction are just slightly better than 1920, so unless and until there is a strong revival, this unemployment among the skilled and low skilled workers will be high. The steps taken by the government to boost manufacturing are apparently insufficient and have failed to revive the MSME sector, which is micro, small and medium enterprises sector. Opportunities for skilled white collar workers are growing, but a major part of the service sector, which is trade and hotels, etc., it is yet to revive. Thereby, it is dampening the job opportunities. So, RBI has estimated the quarter-wise growth in 2022-23 as 16.2, 6.2, 4.1 and 4.0%. Now that it is declining graph, we have started the first quarter with 13.5. So what it was estimated by RBI was 16.2 and it comes out 13.5. So he's talking that the next one, which is 6.2, what will it come out? It will come out nearly 5 or 4. Then what is 4.1 will come out with 3 or something. With 4.0 will come out with 2 or something. So what does this slow start foretell about the remaining 3 quarters? So this was whole, I would say. What is the main summary? I will tell you that he is talking about the non-growth in agriculture, forestry, fishing, mining and quarrying. This sector is not that growing as expected. So this is the main question which is asked by P. Chidambaram. Now coming to, so there is nothing more left news in this page. Coming to the word page, so thousands gather to pay respect to Gorbachev. So this was the man who was no more yesterday, and great man from, as you can call, Soviet Union and presently Russia. Now everyone gathered to pay respect. Also big news from NASA. We have discussed this tomorrow, that we will see whether this launch will be successful or not, and we see a sad news that fuel leak ruins NASA's second shot at launching moon rocket. So previously, when this Artemis 1 was being launched from NASA, there was a technical, uh, you can say, technical error. But this time, this is the fuel leak, and this you can see, this was on the launch pad, and its second launch attempt also was ruined. Now, reading it, NASA's new moon rocket sprang another dangerous fuel leaks on Saturday, forcing launch controllers to call off their second attempt to send a crew capsule into the lunar orbit with test dummies. So, this was not the successful attempt because of the dangerous fuel leak. The first attempt earlier in the week was also marred by escaping hydrogen, but those leaks were elsewhere on the 322-foot, which is 98-meter rocket, the most powerful ever built by NASA. So there was no immediate word on when NASA might try again, because it has already tried for 2 times. Now there is obviously a pushback, but no immediate word for the next date. After Tuesday, 2-week launch blackout period kicks in. Extensive fuel leak repairs could require that the rocket be hauled off the pad and back into its hangar, possibly pushing the flight into October. So this fuel leak repair could push the flight into October. So this is September, and it will be obviously for a month and off. Launch director Charlie Blackwell Thompson and her team tried to plug Saturday's leak the way they did last time, stopping and restarting the flow of super cold liquid hydrogen in the hopes to removing the gap around a seal in the supply line. They tried twice, so this was done by the engineers and scientists. They tried it twice and also flushed helium through the line, but the leak persists. What he called that we have a scrub for a day, announced NASA's launch commentator Dirol Rail. NASA wants to send the crew capsule atop the rocket around the moon, pushing it to limit before the astronauts get on the next flight. So what NASA wants is to send the crew capsule atop the rocket around the moon, now pushing it to the limit before astronauts get on the next flight, which means that it is being pushed before astronaut gets into the next flight. So this will be decided, I think, next month in October. So now comes the economy page. India pips UK to be 5th largest economy, the broader picture. So this news is because India has become the world's 5th largest economy, and it has overtaken which country? The UK in the end March 2022, according to the latest calculations by the Bloomberg. And while this was anticipated by a while, Bloomberg reached this conclusion by using the IMF database and historic exchange rates from the IMF data. So on an adjusted basis, and using the dollar exchange rate on the last day of the relevant quarter, the size of the Indian economy in nominal cash terms in the quarter through March was $854.7 billion. On the same basis, UK was $816 billion. So this is why India have taken over this UK, and according to its forecast, thanks to India's fast growing economy, there is likely to be a huge gap between India and UK within the next few years. Population size, this is one of the most fundamental difference between the two countries. 2022, India has a population of 1.41 billion, while UK's population is merely 68.5 million. So in other words, India's population is 20 times that of UK, and now it have overtaken. So this gap is likely to be bridged in hurry. Stark difference between population of two countries and GDP also per capita provides a more realistic comparison. So how much a person earns there in a year and how much a person earns here in India in a year. This is a great difference. So as the graph above shows, the income of average Indian is very low. So okay, Indian average income is nearly some, you can say, $6,000, and UK is nearly $41,000. So way more, very much. Poverty levels, low per capita incomes often point to high levels of poverty, and it is noteworthy that at the start of the 19th century, UK's share in the extreme poverty was considerably higher than India's. So India was more rich than UK in terms of, you can say, per capita income. But things changed in the 20th, 21st century. However, as the things stand today, the relative positions have reversed, even though India has made giant strides in curbing poverty. So India has tried its everything in terms of to curb poverty. Still, it is trying hard, and poverty is still there. So this is the main, you can say, hurdle in the economic development. Human Development Index, which is a composite of health, education, and standard of living parameters. Three things you must learn that Human Development Index comprises first health. You mean health of person, community, overall nation. Then second education, and third one is what is the standard of living of the country. These three parameters are used. So arguably the end goal of the higher GDP and faster economic growth is to have a better human development parameters. Human Development Index composite of health, education, and standard of living parameter. Despite its secular improvement, India may still take a decade to be where UK was in 1980. So that is a, you can say, big deal for India. And universal health coverage, crucial element of becoming richer as a nation, is the quality of life which is available to the citizens. What the UHC, which is Universal Health Coverage Index, is measured from a scale 0 to 100. So 0 is the worst and 100 is the best, based on the average coverage of what services? First, reproductive services. Second, maternal. Third, newborn child health. Fourth, infectious disease. Fifth, non-communicable diseases. And sixth, service capacity and its access to the general public. While the faster economic growth and the government's policy focus on healthcare schemes since 2005 have made a distinct improvement for India, but there is still a long way to go. So what is the future prospects? I think India must look at reducing and overall eradicating poverty first. Then population controls should also be there, because a lot of population really does not works, and it must try to at least maintain the Human Development Index which is now, and also tend to get into higher positions. So do not slip down, in fact go up in the index. And GDP per capita is very low in terms of all the developing countries and countries which are ahead of India, such as US, China, Japan, etc. So these two, three things I think India must look at, and we will get there. And the time will come that we will get there. So this comes an end to the newspaper. Now this is Sunday Magazine.